Hey guys, what's up? Alec back with the daily stock market, and look at that, just one of our public accounts up to nearly $100,000. It's been a great past 12 months, and I hope you've been along for the ride. Over $38,000 made. We're up over 50 to 60% on the year. That is over a 60% gain in the last 12 months, and in the last 6 months, if we go ahead and load that up, we can see that it's $18,000 since July 18th. So when you have your account growing around 60% per year, great things could happen. You can retire a lot earlier. You could build up your net worth a lot quicker. And if you want to join my private trading group, now over 1,500 success stories on the highlight section. If you click on success number 11, success number 10, you could see some of those for yourself. Go ahead and message me if you want some one-on-one coaching and help with your portfolio with my one-on-one program. If you want to just join the Discord, click on the first link there in my bio, and you can actually see the daily stock market, 1,400 members at this point just on the Discord alone. However, in this video, what we're going to be talking about is 3 AI leading stocks that Mr. Warren Buffett owns. They keep calling this Warren Buffett's secret portfolio, but I don't know why they keep calling it secret, because it's not really that secret at all. People maybe just aren't talking about it as much. But Warren Buffett has traditionally been focused on value stocks and brand name businesses. It also holds 3 of the hottest AI stocks on the planet. The first one is the high-flying stock Broadcom, or ticker symbol AVGO. So if you don't know about Broadcom, just as NVIDIA GPUs have been the undisputed top choice by businesses wanting to run generative AI solutions and build/train large language models, Broadcom's AI network solutions have been the preferred choice for AI accelerated data centers. For instance, the company's Jericho 3 AI fabric is capable of connecting up to 32,000 GPUs to maximize computing speed and reduce tail latency. Minimizing response lag is especially important for AI-driven software and systems. Additionally, Broadcom CEO Hock Tan believes custom AI chips could power a new channel of growth for his company. Tan expects 3 of its hyperscaler customers to order a combined $60 billion to $90 billion in custom chips over the next 3 years. It's equally important to recognize that Broadcom is more than just an AI company, okay? For instance, it's also one of the top suppliers of wireless chips used in 5G capable smartphones. The ongoing expansion of 5G networks has led to steady demand for Broadcom smartphone chips and accessories. It also provides cyber security solutions, networking products, and optical sensors, amongst other products as well. If an AI bubble were to develop, Broadcom's diversified operating model should help successfully navigate the storm. So what do analysts have to say about Broadcom AVGO, AVGO at $237 per share on average? The analysts see little to no upside on AVGO. As we scroll down, we can see where these analysts are coming from. Also, just reiterated yesterday from Barclays, we can see that $260 price target on AVGO raised a little bit there. Another $265 price target from Morgan Stanley. A few other $260 price targets, a top 25 analyst giving a $260 price target as well. So there is a good chance that we could see this one closer to $260 per share in the next 12 months, which offers little to no upside. That's in the analyst's opinion, by the way. Remember, on November 27th, just like a month and a half ago, right, we could see Broadcom was at $159 per share, and since then it's up 48%. So maybe analysts at this point are kind of thinking that AVGO or Broadcom kind of has already seen its explosive growth that it's going to see for 2025, and they experienced that short explosive growth all in the month of December, really in just a week's time, 6 days. And if you forgot why it took that big jump in December, we saw very great earnings, good guidance, and also analysts all raising their price targets all at the same time. So that 46% growth, that analysts are saying around $240 per share on average, or that $260 per share, that growth looks a lot better when you're buying Broadcom under $200 per share and closer to those November lows of 165 or even under 160 if you possibly could ever get in at that price again. The best thing to do if you're a long-term investor is just dollar cost average in. We're already up 114% in the past year, so there should be some corrections, but there's no guarantees, and that's why dollar cost averaging is the best thing you could possibly do when it comes to that. We also have a market cap of 1.1 trillion, so this is already an extremely large company, a PE ratio of 185, so obviously it's trading a little bit rich, but you are getting a little bit of a dividend, almost a 1% dividend on this stock here, Broadcom. Now, the next stock that Warren Buffett secretly owns, air quotes and secretly, is Microsoft. Although Microsoft is developing AI GPUs for its use in data centers, the company's artificial intelligence ties primarily to have to do with use case of its technology. For example, Microsoft Azure is the world's #2 cloud infrastructure service provider with an estimated 20% share of cloud service spending during the third quarter. Amazon is their big competitor right now. Microsoft has been incorporating AI solutions into Azure to give its clients access to a host of generative AI solutions. AI has the potential to reaccelerate Azure already impressive growth rate. Microsoft also has AI development partnerships galore. Arguably, the most well-known of its partnerships and investments is with OpenAI. Remember, they own around 50% of OpenAI, the company behind ChatGPT, the popular virtual chatbot that led to the rise of AI. However, it's also partnered with BlackRock, Global Infrastructure Partners, and MGX to invest in the data center infrastructure needed to meet the demands of an increasingly AI-dependent society. Similar to Broadcom, Microsoft is much more than just an AI company, obviously. Its cloud service operations have been consistently growing by double-digit percentages, while its legacy operating divisions such as Windows and Office continue to generate a bountiful operating cash flow. Microsoft has more cash than it knows what to do with it, and that's not a bad thing. And obviously, we won't spend too long on Microsoft because we already know them pretty well. They're down 4% in the past month, by the way. Year to date, they're pretty flat. Last 12 months, they're only up 10%, with highs going as high as $460 per share and lows as low as $397 per share. So buying under $300 per share is going to be the best for long term. Dollar cost averaging is going to be the best thing overall, though, and just buying a little bit heavier once it goes under 400 and closer to 350 is probably the best plan. However, we see the PE ratio is fairly fair for Microsoft. It's 35, implying it is a good deal. It is fair. It has a great moat on a company like Microsoft. So you're going to have to expect to pay a little bit more on that PE than like the S&P 500, for example. But I would say it's a good deal in the stock market right now to be dollar cost averaging in for long-term plan. If you're not planning on holding Microsoft for 5 or 10 years or longer, then there's probably no point in owning them. And there's probably better deals in the stock market. Market cap, $3.19 trillion. One of the largest companies still, paying a good dividend, around 0.73% dividend yield on Microsoft. And the last secret stock that's not so secret that Mr. Warren Buffett owns is Alphabet, otherwise known as Google. Like Microsoft, Alphabet is more about AI utility than hardware, even those developing tensor processing units to speed up machine learning workloads. This company is more about the real-world application of AI. Google Cloud trails Microsoft Azure and Amazon Web Services in terms of global cloud service spending share, only 10% for Google Cloud. As of the third quarter of 2024, Google is relying on AI to allow its customers to build and train large language models, improving machine learning capabilities, and run generative AI solutions. By the latter half of this decade, Google Cloud could become Alphabet's top generator of operating cash flow. But to keep with the theme of this list in this video, Alphabet is far more than just Google Cloud. In December, Google accounted for nearly 90% share of worldwide internet searches. Holy cow, that's a large number. Worldwide internet services, Google accounts for nearly 90%. So imagine if Microsoft or ChatGPT, OpenAI, which is owned by Microsoft, starts getting some of that market share, and Google, goes down to 70% or 80% or 60%. That's going to be a huge hindrance on Google as a whole. So there's a lot of risk with Google, but there's also still a lot of reward to be had if they remain the top dog in search. And, AI doesn't disrupt that. And if it does disrupt it, Google can actually stay ahead of those trends and have a better product than something like OpenAI. Looking back 10 years, Google has consistently maintained an 89 to 93% share of global searches, therefore making Google the clear choice for advertisers wanting to target users, often affords Google ample ad priced-in power. Alphabet is sitting on a mountain of cash as well. With the exception of Apple, no public company has repurchased more of their own stocks over the trailing decade than Google has. And that's an awesome thing to see your company repurchasing shares, especially if they have a mountain of cash and they don't know what to do with the cash. Buy more of the shares. If you know that you're going to have a good year, a good decade, why not buy those shares? So overall, we'll keep it short with Google. Also, there's pretty much the same as Microsoft, what we said for Microsoft. Remember, they haven't moved much. However, in the last 3 months, they're up 18%. And in the last year, they're up 38%, much more than Microsoft, okay? And they have lows as low as $132 per share in March, and another low was around $148 per share in September of 2022. Okay, now they're closer to $195. So obviously, if you could get in under $150 per share, that's when you want to start buying a little bit heavier for long term. Again, you want to be holding around 5 to 10 years if you're getting involved with Google. And dollar cost averaging by far is going to be the best way to go about buying Google shares. Remember, don't time the market, buy the market. That's always what I like to say. Now, the PE ratio, if we scroll down, we can see that it is better than Microsoft, implying that, yes, it is a better deal than Microsoft at a 25 PE ratio. For something like Google, that's absolutely amazing to see. And it's almost valuing the stock as a value stock. So the fundamentals are great right now. It is a good deal. That's why the stock just keeps going higher and higher. This is going to be a great stock to own for the next decade, especially with the integration of AI, just like Microsoft as well. This is a good video to save, pin it to your list, like this video, come back later in the future and see how these 3 stocks have performed. And I'll thank you guys very quick here for making it to the very end of the video. If you want to see more content like this, drop a thumbs up, share this video with a friend, subscribe on YouTube with post notifications on, and I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.